Hello, good morning, ladies and gentlemen, and how are you doing today? Hello, good morning, ladies and gentlemen. So, I would like us to confirm that we're on the same page here. So, if you can see my screen and you can hear my voice clearly, I would appreciate that you type in hi in the comment section to confirm that, please. So I would like to see some feedbacks in the comment section to confirm that we are good to go this morning. Okay, let's see what we have in the comment section. All right, okay. Julang, hi, good morning. Chamil, good morning to you. 6450, good morning. Watch Vor, good morning. Hey Carrie, good morning. Glad to have you around this morning. All right. So I will be taking this as a positive confirmation that we are good to go this morning. I'm excited to welcome you to another promising session on the Extreme Speed. My name is Sheriff Daramola, and for the next 1 hour, I will be your host where we shall be evaluating the financial market using technical parameters to identify trading opportunities lining up for us today. Well, it's our culture here. The first thing we do is to review all the pairs we have been monitoring since the beginning of the week. So we have 4 to 5 pairs that we have been monitoring. So we are going to be looking at how well those pairs are doing so far, and at the same time prepare for the New York session today by identify trading opportunities, managing the trade basically to see how we can maximize profits on this instrument. And for those who are joining us for the first time, you are welcome on board. Glad to have you around. And what we simply do here on a daily basis is to gather here as a community to evaluate the financial market using technical parameters to identify trading opportunities. So we use this information here to prepare ourselves against the New York session and use the information here to open a trading position. And I want to implore you to remain patient and try to stay tuned in to be part of the session till the end. And I promise you, with time, you get to understand how this works, and you will be able to use the information you have gathered here to identify or to be able to make individual decision on the pairs. So thank you once again, and the next thing we are going to be doing now is to dive into the chart. And the first thing we are going to be looking at is the economic calendar. So we have a major macroeconomic event coming up today. Okay. Okay. All right. So I a little noise. Okay. How about now? Is it okay now? Please confirm that we are good so that we can go ahead and continue with the session. Okay. So we are looking at the economic calendar right now, and like I said earlier, we have a macroeconomic event coming up today. That is the FOMC minutes, and we can already see in the market in the last 24 hours that the market has been risk averse as participants are anticipating the major event coming up today. And we shall be looking at how we can position ourselves in order to take advantage of a trading opportunity for today. So with that being said, here we shall be diving into the chart at this point, and the first commodity we are going to be looking at this morning is the US oil. And on the US oil, we have the situation here running since the beginning of the week, and as at yesterday we had a sell position triggered finally after price action did a breakdown retest of that $76.35 level. So at the beginning of the week, we had the situation where we had a channel figured out at the beginning of the week where price action was caught within the was caught within the $77.90 area, which was initially our resistance point for the week. And then we had a support level for the week sitting around the $76.35 level. So initially we bought the USOil, but after price action broke down the $77 level, we begin to see selling pressure below the $77.90 area to signal the possibility of a selling momentum going on in this market. And with the further breakdown of this bullish trend line, it was a clear sign that we should be positioning ourselves for selling momentum. And one thing I stated here during the live session yesterday is that we want to be using the $76.35 level, a level which has been a strong buying niche in this market since the beginning of the week, to give us a signal of a selling momentum. And if you remember vividly, I told you yesterday that we will continue to look out for buying opportunity if price action remains above the $77.90 level. And in fact, we had price action moved in our favor. It moved about 60-70 pips thereabout before we started seeing the selling pressure, which took us out of the position we were in. And as price action continued to the downside during the later part of the New York session yesterday, we saw the breakdown retest of that support level for the first time this week, and that was a beautiful signal for us to join a decline at that point. And we had our sell position triggered below that structure. And if you are joined at that move, congratulations to you guys, as you would currently be running with over 134 pips in profit at this point. And I also made mention that we want to be adding more position if price action does break down the $76 area here. Remember, we had this structure identified too as well, and we said the breakdown retest of that structure too will be welcoming additional position. And this is exactly what we saw here. Price action broke down the structure, giving us another opportunity to join a decline. And if you had also taken that, you will currently be running with 94 pips in profit. So a total of over 200 pips is running in profit right now with the two positions that we had here. So congratulations once again for those who had been on standby to catch this move. Now, the next thing we want to be doing right now is to secure this current position by moving our stop loss accordingly to lock in some profit. And with the current situation here, I will be suggesting that anywhere below the $75.60 level area is most appropriate to lock in some profit as we continue to monitor price action. So before I go into the details here, I would like us to have an holistic view of what is really going on here on the daily time frame. And for those who had missed out on this opportunity, don't worry, we shall be looking out for tradable opportunities after monitoring our participants, our price action has been here on the daily time frame. So now we shall be scaling up into the daily time frame so that we can have an holistic view of what is really going on here. And if we look at the daily time frame, we at the beginning of the week we laid emphasis on the fact that price action has been bearish, as you can see, since the beginning of I think for the last 7 months now, price action has been bearish. And if we go further ahead to connect the series of lower highs here, you will see that we have a uniform and resultant bearish trend line to further emphasize the strength of the sellers in this particular market. And if we look at what has been happening here in the last 3 to 4 months, we notice that we have a significant structure around the $80 level, which has been a strong selling niche in this market. If you look at what happened here in the month of November, we saw our sellers came in here to negate all attempts by the buyers. The same thing also happened at the beginning of the month of December. Last year's trading session closed around the $80 level, and we had the resumption of selling pressure again at the beginning of the year, right around the $80 level, to further emphasize that strength of the sellers at this point. And if you look at what has been happening here in the last 4, 5, 6 months, you will see that price action As soon as it gets into that structure there, we begin to see selling pressure around that area. And the same thing also happened here last week. And these are all scenarios that further emphasize the strength of the sellers at this point. And as a result of these, a breakdown of the $78 level was a very beautiful opportunity for us to continue to join this decline to the downside. And during the live session yesterday, we were at a critical point where I informed you of our price action was currently trading along that bullish trend line, which if you see what has been happening here in the last 2 months, this was the lowest point price has ever been in the last 1 year. That is the $70 level, and we were able to identify a higher low around the $73.50 level. And when we connect the higher lows, you can see we have a bullish trend line. And during the course of the live session yesterday, we identified the fact that price is currently trading around that trend line, and I told you that it is very important that we monitor and see how participants in this market will be reacting to this trend line here to decide what our next line of action will be. And to further emphasize the importance of the structure, when we zoom out here, you can see that that area has at one point in time a strong demand zone in this market. So we need to see price action break down the bullish trend line and that demand zone area to give us a clue of a possible selling opportunity. And if we scale down to the lower time frame, we are going to be scaling down to the lower time frame now. But before I do that, I want us to focus our attention around the $75.50 level, a level which has been a strong demand zone in the past here. So the way things are going right now, it appears that price action is likely going to be breaking down the structure. So I will be scaling down to the 1 hour time frame. So let's see how participants in this market is going to be reacting to the $75 level, and whatever happens around here will decide what our next line of action will be. So when we scale down to the 1 hour time frame, this is what we can see here. And as you can see, price action at breaking down the, hold on a second, that was a mistake. All right, so the $75.50 level falls around here. So I think I will just readjust this structure I identified at the $75.60 to $75.50 area, which was a strong buying niche in the past. And we already have a bearish engulfing candle that has already broken down that structure to the downside. So now that we already have a breakdown of the $75.50 level on the 1 hour time frame, this is a beautiful signal that we might be having a bearish momentum going forward. And you know, when we look at this from a technical standpoint, whenever we identify a breakdown of a structure like this, there is a high chance that price is likely going to come back and do a retest of that structure to further emphasize the strength of the sellers here. So we are looking forward to a retest of the structure in order to join a decline to the downside. So what this simply means is that for those who had missed out on the opportunities that we took advantage of at the breakdown of the $76.35 level yesterday, then we might likely be looking forward to another opportunity if it so happens that price action comes back to do a retest of the structure that was broken yesterday to incite another wave of bearish momentum at this point. Now, in addition to this current structure now here, and in order to make things a little bit easy for the highs to identify a selling position here on the US oil, I was able to connect the series of lower highs here. And if you look at what has been happening here in the last 24 hours, you can see that price action has been bearish, finding lower lows and lower highs. And if we take a step further to identify the series of lower highs here by connecting those points together, we have this new bearish trend line, which we shall definitely be using to guide trading activity for today. And what this simply means is that we want to see price action continue to trade below the bearish trend line here to give us a confirmation that our sell positions still remain valid. So like I said earlier, if you had missed out on these opportunities that we had yesterday, then we want to be waiting for price action to either come back into the bearish trend line, to retest the trend line, or probably the $75.50 level, whichever case it may be. But most importantly, what we are looking out for is selling pressure, that is negation of this area by the sellers, that is negating all attempt by the buyers to break out of that structure. Then if this happens on our lower time frame, then definitely we want to be getting ready to join that decline to the downside. Now there is a catch to the situation here, and that is what happens if price action breaks out of that trend line. Well, if price action breaks out of this trend line, it's going to likely be a bullish signal. That is, the trend line may no longer have the capacity to continue to hold this bearish momentum anymore. But one thing I would advise us to do whenever we sight a breakout of this bearish trend line is that we want to remain patient for further confirmations to join a rally to the upside. And this is going to be a counter trend opportunity, and as a result of that, we really need to see a significant confirmation that we are actually going to be buying at this point. So once we have a breakout of this trend line, we are going to be very patient and wait out for a retest of structure on our lower time frame, that is price action comes back to retest the trend line, or probably the $75.50 level. And most importantly, we want to be seeing buy pressure around this area. Then we want to be joining a rally to the upside from there. And if a further break above of the $76 level happens, this will likely be welcoming additional position to our existing trade at this point. So we need to be very, very careful here if price action breaks out of this trend line, as it's one sign that sellers might no longer have the capacity to continue the momentum anymore. And once it breaks out of that structure, we'll remain patient to look out for retest of structure, buying pressure above this level. Then we could actually be thinking of buying the US oil at that point. But if that does not happen and price action continue to trade below the structures here, we'll definitely be thinking of adding more position and feeling comfortable in the current sell position that we are in right now. So these are the scenarios we shall be looking forward to on the US oil for today. So I will be advising us to remain be on standby so that we can catch any of these opportunities that will happen in this market. And to make things easy, you might also want to screenshot my screen, that is munch my screen, so that you can use it as a reference point when you're about to make your individual decision today. So with that being said here, if you have any questions, feel free to drop your inquiries in the comment section, and I will be taking time to read through the comment section from time to time while I move on to the next option for today. So the next option we shall be looking at is the US tech, which is the most profitable trade for us in the last 24 hours, in the last 48 hours in this market. Now look at what we have here on the US tech 1 hour time frame. At the beginning of the week, we initially cited a channel between the 12,370 level. So we had something like this. We had a resistance point around that level, and then we had a support area around the 12,320 area to give us a flat channel. And what this simply tells us is that there is an indecision or a low liquidity in this market, and this has resulted in that flat channel. And one thing we got to know is that on Monday was the president's public holiday, and as a result of the observation of the public holiday there, the market was not open, hence the low liquidity in that market. And from a technical standpoint, whenever we identify such a simple flat channel like this, all we want to be doing is to wait for either a breakout of the channel to the upside or a breakdown of the channel to the downside for trading opportunity. And this is what we saw here during the early hours of Tuesday. We saw price action break down the 12,320 level to trigger our sell position at that point. And in fact, price action moved significantly well in our favor to hit the TP target at the 12,200 level to give us about 120 pips thereabout. Now, during the live session yesterday, we saw the situation here where bullish momentum came in around the 12,200, and I told you how strong that level has been for buying momentum in the past here, as you can see. And as a result of that, we said this bullish momentum here could be a retracement phase of that previous impulse leg that we had that culminated at the structure. And as a result of this, we identified the sell window around here where we said selling pressure around the structure will be welcoming an additional position to our existing trade. And if price action does break down the $12,200 level, we want to be adding more position to our existing trade. And this is exactly what happened here during the New York session yesterday. And I think to make things easy for us, I was able to identify a structure around the 12,240 level on our 15 minutes time frame, where I said we want to be selling if price drops below that level. And if I scale down to the 15 minutes time frame so that we can see what I was talking about here during the live session yesterday. So this is the 12,240 level that we identified during the live session, and I told you that we want to be selling right below this level if the selling pressure continues below that area. And in fact, the market gave us an opportunity during the New York session. We saw the breakdown of structure. If you had missed that, price action actually came back to do the retest of that level, and since then we have seen our price has continued to trade to the downside. Then a further breakdown of the 12,200 level as projected yesterday was another opportunity for us to add more position to our existing trade. So from this current structure here to this point, if you are taking that move, that's about 180 pips in profit. And if you had also taken advantage of the breakdown of the 12,200 level, you will be with about 150 pips in profit. So we have a total of over 300 pips in profit, which is quite impressive on the third day of this week. So right now, for those who are taking advantage of these opportunities, well done to you guys for being on standby to catch these moves. Now, the next thing we want to be doing is to secure this current position. That is, if you are still in this trade, you want to secure this current position by moving your stop loss accordingly. And what I will be suggesting here is that somewhere right around the 12,120, which has been a good resistance point here in the last 12 hours, seems most appropriate to place our stop loss in. So let's place our stop loss somewhere around the zone here, and we hope that price action will continue to the downside from this level. Now, for those who had missed out on these opportunities that we had yesterday at the 12,240 and the 12,200 level, well, we shall be looking out for more opportunities to join this decline to the downside if the market will permit us. So what I'll be doing right now is to scale up into the daily time frame so that we can have a better perspective into what is really going on in this market from an holistic point of view, after which we are going to be coming back into the 1 hour time frame to make a decision on how we want to be positioning ourselves to catch a trading opportunity during the New York session today. So this is the 1 hour time frame here. Hold on a second, please give me a moment. All right, so I'm back here. And one thing we observed on the daily time frame is the fact that price has been very bearish, and in fact throughout the course of last year we saw a situation where price uniformly traded on lower lows and lower highs. And to further emphasize the strength of the sellers in this particular market, we were able to connect the series of lower highs here, which has given us this bearish trend line that you can see on your screen right now. And this trend line continued to resist all attempts by the buyers to break out of the structure and continue to push price to the downside. However, things got a little bit interesting in the month of June, as we saw around the $11,000 area. This zone was a very comfortable niche for buying potential, as we saw all attempts by the sellers to break down the structure had been negated by buying pressure around this area. So sellers were unable to break down the $11,000 level, and in fact this lasted about 6 to 7 months here, as throughout the second half of last year sellers were unable to break down that level. And this simply means that participants in this market found the $11,000 price cheap enough to buy the US tech. And what happened since the beginning of the year was that we saw this bullish momentum started above the $11,000 level, and price action continued to find higher highs and higher lows, which led to the final breakout of that bearish trend line. And at this point we realized that the trend line no longer has that capacity to continue to negate all bullish attempts, and this resulted into a situation where price continued to find higher highs, and this bullish momentum appeared to have culminated at around the 12,900 level. And to further emphasize the importance of the 12,900, we zoomed out a little bit and went to as far back as the month of March last year to see how this level had been a major determinant of price action in the past. As you can see, it has been more of a selling niche around this area, which simply means that participants sellers are very strong at this particular area. And as a result of the selling pressure around the 12,900 level since the beginning of this month, we saw a situation where price action transitioned into a consolidation phase here, which at the end of the day has resulted into a reversal pattern in the form of a double top structure. So we identified this double top structure yesterday with a neckline of that reversal pattern sitting at the 12,310 level. And what we said yesterday is that the breakdown of the 12,310 level will be a confirmation that that reversal pattern is very valid. Now another thing that also buttresses the fact that we might be having a sell-off in this market is the fact that price action has broken down that bullish trend line. Look at this bullish trend line here. It has been a line that has been supporting bullish momentum since the beginning of this year, and in fact there was no time price ever broke down this structure until recently, and that was last week Friday when we saw the breakdown of this trend line here, and that was a sign that the trend line no longer had the capacity to continue to hold that bullish momentum anymore. And we were lucky enough to be part of this trade as the breakdown of the neckline of that reversal happened, as we were able to scoop all this potential profit, which is about 280 pips thereabout in that regard. Now right now price is back at a critical point right now, which is the $12,100 level. And to let you know how important that level is, if we go to as far back as the month of November, remember, if you have been with us here since the month of November on the US tech, you would remember that we had a structure here where price action was caught within a channel, and the $12,100 level was serving as a strong selling niche, and it was the resistance point of that channel. And during the first day of this month, we saw price action break out of that 12,100 level for the first time in about 3 months, and the bullish momentum from that level was so massive that we had an engulfing candle in that regard. Right now price is back at that structure, so what we are going to be doing now is to zoom into a much lower time frame. Let's see how participants in this market is going to be reacting to the 12,100 level to decide what our next line of action will be. And if we look at this from a technical standpoint, looking at the breakout of the 12,100 level that happened at the beginning of the week, and if we start seeing buy pressure around that area, then we might likely be seeing this as a retest of structure with the hopes that price action will incite another wave of bullish momentum. So that is one scenario that we want to be taking into consideration while planning for the New York session today. Another thing that could happen here is this engulfing candle could transition into a trend continuation pattern around here, probably in the form of a bearish rectangular pattern on our lower time frame. Breakdown retest of that structure has a possibility of inciting another wave of bearish momentum, probably back into the 11,700 or the bearish trend line that was broken during the later part of last month's trading session. So we are looking at two scenarios here. So we are going to be scaling down to the 1 hour time frame to see how participant in this market is reacting to the structure, and whatever market structure we are able to identify there will be giving us an hint into how to position ourselves to take advantage of any trading opportunity during the New York session today. So in that regard, we shall be scaling back down into our 1 hour time frame, and we shall be taking into consideration the importance of the $12,100 level. So let's identify the $12,100 level here, and if we zoom in, so this is where it's more important for us right now. So we have the $12,100 level somewhere around here. So I think I will just have to adjust the 12,120 to suit that current structure there, or probably put it in between so that we can have an average. So let's put that 12,110, and to make it closer to that structure. You know, one of the things we look out for in this kind of situations are zones. We can't be specific of a particular price really. So we just look out for zones, and let's put between the 12,100 and the 12,110. So for the sake of this, let's just place it $12,110 levels, which also covers that area around there. So like I told you on the 1 hour time frame, there are two things we want to be looking out for around this area. So if price action evolves into a reversal pattern, probably like a double bottom structure, then we might likely be seeing a bullish momentum from that level. Let me show you one more time so that you can see what I'm talking about. So on the daily time frame, this is what we saw on the daily time frame. So I told you that we are going to be looking forward to see how price will be reacting to the 12,100. So if we see buy pressure here, remember we had the breakout of structure here, and from a technical standpoint, whenever we cite a breakout of structure, there is always a likelihood that price action will come back, do a retest of that structure to incite another wave of momentum in the direction of the prior leading price action. So now that is one scenario there. So if we cite a reversal pattern, we want to be joining a rally from that area. But if this situation here transitions into a trend continuation pattern, then definitely we want to be selling below the 12,100. So now going back into the 1 hour time frame, it appears we are already finding a structure around that area. So I will be zooming into that structure, as this is where we want to be focusing on to plan against the New York session today. So we have the situation here, and if I bring out my line chart, we also have a support level for this channel, which falls around the 12,000 and let's see, I think 12,060, I guess. So let's just put it at 12,060 for the sake of clarity. So we have the 12,060 level here, and so we have something like a flat channel as well at this point. Now there are two ways to trade this. Now the first thing is, if following this impulsive move to the downside, it could transition into a double bottom structure, which is a strong technical reversal pattern, where the 12,110 level would be the neckline of that pattern. So what this simply means is that if we're going to see the maturity of this reversal pattern, we want to see a buying opportunity at the breakout retest of the 12,110 level to make this reversal pattern a matured one for us to buy. And if we are buying there, this is more or less going to be a counter trend opportunity. And remember, we have this bearish trend line since the beginning of the week, which has been resisting buying attempt. So if a breakout of that level happens, then definitely we might want to be taking this counter trend opportunity with the hopes that price action will come back and respect that trend line, or it could go as far as the 12,200 level. Remember, this level was broken to the downside, and in fact that level also was a strong demand zone in the past. And with the breakdown of that structure, we might likely see this bullish momentum rise back into the 12,200 level, where depending on how price action reacts to the structure will now determine if we are going to be adding more position That is, if a breakout of that level happens and if selling pressure resumes below that level, then we will be seeing it as a retest of structure to join a decline to the downside from that level. So that is one thing we are going to be looking forward to here. That is, if price action breaks out of the 12,100, then it would have evolved into a reversal pattern. Now, the next thing we are going to be looking forward to is this consolidation phase here could actually transition into a trend continuation pattern. And how is that possible? Well, if we look at what has been happening here in the last how many hours now, I think in the last 14 hours, I guess, price action has been consolidating, hereby finding a range between the $12,100 level and the $12,060 level, to emphasize that there is an indecision in this market. And obviously, whenever we have this kind of structure, it more or less gives us a sign that participants are waiting for a catalyst that will bring some liquidity into the market, so that we can have a sense of direction of where price is likely going to be heading. And we have the FOMC coming up today, so it's very peculiar post macroeconomic event to have such structures. And like I said, this kind of structure here could transition into a trend continuation pattern, and this could be a bearish rectangular pattern. As you can see, price has been linear with this channel. So if it so happens the price action breaks down to $12,060 level here, then that will transition into a reversal pattern. Continue selling pressure below the structure on our lower time frame will definitely be giving us an opportunity to add more position to our current sell position at this point. So these are my views here on the US tech. So I hope that we'll be on standby to catch any of this opportunity when they finally happen. So you can have your orders placed at each end, so that you can be able to catch these moves when they finally continue to gain some momentum during the New York session today. So that is that on the US tech. If you have any questions, feel free to drop your enquiries in the comment section. Now, moving on, we are going to be moving on into the USDJPY. And in fact, on the USDJPY, we have been quite profitable since the beginning of the week. We've been buying the USDJPY since the beginning of the week, as we took advantage of the breakouts of the 134.150 level here during the early part of I think the later part of Monday's trading session here. And as a result of this, we have added position at the breakout of the 134.500 level, and we also added another position at the break above of the structure here, making us have like 3 positions at least on the USDJPY. And one thing I told you yesterday, that we should move our stop loss to somewhere right above the 134.500 level or around that area to secure the current buy position, with the hopes that price action will be continuing to the upside here. But in fact, what we have seen in the last 10 to 12 hours now, price action has been caught within a channel. So just like the other pairs that we have been reviewing, you can see that the consolidation phase here is also happening in this market. So it's very obvious that everyone is anticipating the FOMC to see what is really going to be happening there and how the market is going to be reacting to that news. So now we have a situation where price is currently consolidating between the 135.00 level, where we have been witnessing selling pressure since the beginning of this week, and we have the support level at the 134.700. And from a technical standpoint, whenever we have a channel like this, all we want to be doing is to remain patient, to look out for either a breakout of the channel for buying opportunity or a breakdown of this channel for selling opportunity. And another thing I would like us to do here is to scale up to the daily time frame, so that I can show you how important the 135 Japanese yen level has been. This has been the highest point price has ever been this year, and ever since price tested this level, we have been witnessing selling pressure from that area. We saw what happened here on Friday last week. We saw selling pressure from that same 135.00 level, and during the course of this week as well, we have been witnessing selling pressure around that area, though we had one big attempt of a bullish momentum breaking out of that structure, but immediately it was followed with a huge bearish engulfing candle, negating all attempts by the buyers to break out of that level. So what we want to be doing now, for the sake of those who are not part of our live session prior to this current one, I would want us to scale up to the daily time frame. Let's see how important that structure is so that you can be on the same page with us. So now we are on the daily time frame rather. So I will be zooming into the current structure here, and if you look at what we have here, this is the 135.00 level, and as you can see, in the last 3 to 4 months, this level has been a major determinant of price action, though it was initially a buy zone before the breakdown of the structure happened in the month of December. And since the breakdown happened in the month of December, we have seen a situation where price has continued to trade below that level to further emphasize the strength of the sellers at this point. And in addition to this structure is this bearish trend line that we have here. If we connect the series of lower highs, that is since the month of October when price crashed to the downside, we have the bearish trend line after connecting the series of lower highs. And one thing that makes this whole market structure very interesting is the fact that price action is right around that bearish trend line here, which also shares a beautiful confluence with the 135.00 level. So at this point, we are at a critical point in this market where anything could actually happen from this level. And if we take into consideration this bearish momentum, there is a likelihood that we could see multiple rejection of the 135.00 level to signal a sell-off in this market to the downside. And another thing that could happen here is a breakout of the 135.00 level, which also shares a confluence with that bearish trend line to incite a buying opportunity around this area. So at this point, we just need to understand how participants in this market is currently reacting to the 135.00 level to determine if we are going to be buying or selling this one. So remember, we are already in a buy position which we took here, so we are hoping that price action will continue to the upside, hereby breaking out of both the bearish trend line and the 135 level. But if that does not happen and we continue to see selling pressure here on our lower time frame, we will have no other choice than to anticipate a sell-off in this market. So let's scale down to the lower time frame. Let's see what is really going on here and use the market structure to identify trading opportunities for us today. So now we are back at the 1 hour time frame, and this is what we have here. And it is very obvious that price sellers has continued to hold on to this market by negating all attempt by the buyers to break out of the 135.00 level. And in addition to this is this bullish trend line here, which has been supporting bullish momentum since the beginning of the week. Remember, we had this bullish trend line identified. I just readjusted it right now. And if we connect the series of higher lows together here, we have that trend line figured out. And right now, price is trading above that trend line. And what this simply means is that this trend line still has a potential of holding this bullish momentum at this point. But what we really want to see here is to see a breakout of the 135.00 level to further give us that leverage to add more position at this point. So as long as price remain above this bullish trend line and the 134.700, we shall remain comfortable in our buy position on this trade. So the next thing I want to also do, remember, we already have our stop loss around the 134.500. So I will be advising us to remain patient to wait for a breakout of the 135.00 level by pressure above the structure to add more position if you are already in this trade. And if you are not, it's going to be a good opportunity for us to join that potential rally to the upside. Now, another thing could happen at this point in the market, that is selling momentum could come in if we take into consideration the sell pressure we have been witnessing around the 135. Excuse me, please. So if we consider the selling pressure we have been noticing around the 135 Japanese yen level, remember we saw the same thing happen during the course of last week's trading session. And if we look at what has been happening here since the beginning of the week, we can see after reaching the highest point at the 135.250 level, we have been seeing a situation where price has transitioned into lower heights. And as a result of this, we have this bearish trend line figured out at this point. Now, if the selling momentum here continues in such a way that it breaks down that bullish trend line, well, that will be the first time the bullish trend line will be broken this week. And this will likely be a signal that we are in for a bearish momentum. But one thing about this current structure is that we don't want to be jumping into that decline right away, as we need further confirmations to ensure that this bearish momentum is valid. And as a result of that, we want to be seeing price action come back to do a retest of that trend line, which also shares a beautiful confluence with that 134.700 level, which has been a strong demand zone in the last 24 hours. So if that happens, then definitely that is a good sign that the bullish trend line no longer has the capacity to hold bullish momentum. Then we shall be getting ready to join a decline below the 134.700. So this is how we want to be positioning ourselves for trading opportunity on the USDJPY while we wait for breakout of the 135.00 level to add more position to our existing buy trade. Or if you are not in this trade yet, looking forward to buying above the 135.00 level, we should have an open mind that a breakdown of the trend line and the 134.700 is also a possibility at this particular point in time. So we also want to take that into consideration while we continue to monitor price action. So you might want to munch my screen so that you can use it as a reference point when you're about to make your individual decision on the USDJPY. And for those who are already in the buy position we are in right now, make sure you have moved your stop loss to secure this current buy position that we are in while we wait out for more opportunities to unfold. So that is that on the USDJPY. If you have questions, feel free to drop your inquiries in the comment section. So I will be moving on to the last pair for today, and that is the GBPJPY, which was introduced to us by one of us in the house here, that is 283. And we had a situation here where we had the buy position triggered after the breakout of that neckline there at the 162.00 level. So we have till this moment, price action is from our first position here. We have about 150 pips running in profit, and we have a second position here triggered above the 161.850 with over 100 pips in profit. And for those who had bought above the 163 level that we identified during the live session yesterday, well, currently you will be at break even at this point, as price action is back into that entry zone around that area. Now that we are heading into the New York session today, I would like us to scale back into the higher time frame, that is the 4 hours time frame, where I want to refresh our memories on this, and at the same time for those who are not part of the live session, so that they can also be on the same page with us here. So the first thing I'll be doing here is to scale up into the higher time frame. I want to show you how we got to this point and how we decided to buy the GBPJPY for this week. So I think the daily time frame will be most appropriate here. So right on the daily time frame here, this is what we saw on the daily time frame, and zooming into what has been happening since the later part, last quarter of last year, we can see that price has been bearish here, and as a result of that, we had this bearish trend line figured out at this point. But one thing that caught our attention is the fact that we have a huge demand zone around the 156 and the 152 area, which has been negating all attempt by the sellers to break down that structure. And in fact, what we saw here since the end of December last year stroke the early days of this year, we saw buy pressure above the 156 level, which is a higher low, as price action was unable to break the previous low here, giving us a clue that buyers are gradually coming in this market. And to further buttress this was this beautiful reversal pattern that we were able to identify here. So following this impulsive leg that crashed into this demand zone, we saw this huge consolidation phase here, which looked more like a reversal pattern. And you know, from a technical standpoint, whenever we identify a reversal pattern like this, the next thing we want to be doing is to identify a neckline area where we shall be using it to guide trading activity. So we are going to be looking out for a breakout of that neckline to make this reversal pattern here a valid one. And in fact, a couple of days ago, we saw the breakout of that structure here with an engulfing bullish candle to emphasize the strength of the buyers at this point. And you all know that from a technical standpoint, let me zoom out so that we can see this. We all know that from a technical standpoint, whenever we have a breakout of a structure, there is a likelihood that price might come back to do a retest of that level to incite another wave of bullish momentum. So we don't know if this is going to happen yet. Probably this momentum we are seeing that started today might likely drop to as far as that, or it could turn into a trend continuation pattern around here, where a breakout of the structure will be an opportunity to join a trend continuation to the upside. So these are the things we shall be looking at on the lower time frame, and we shall also take into consideration the 163.500 level, a strong psychological level here, which has been a strong selling niche in this market. As we can see, as soon as the bullish engulfing candle got to that point, we have been seeing sellers negating all attempt by the buyers to break out of that structure. So we have the 163.500 level figured out at this point. So now going back into the 4 hours time frame, is it the 4 hours time frame? Let's look at that first of all before we okay. I would like to zoom this out a little bit so that, let me place that 6315. okay, and we have the neckline of the reversal pattern here at 315 too as well. So this is what we have here on the 4 hours time frame. As you can see, now we have a situation where price is within the 163.500 and the 162.00 area. And remember that we have this bullish trend line figured out here. So I would like to extend that bullish trend line a little bit, as we shall definitely be using it as a yardstick for trading activity for today. So now, following this impulsive move to the upside here, and with the sell pressure that resumed below the 163.500 level, we might likely be seeing a retracement of that impulsive leg into our golden zone area before another wave of bullish momentum will happen. And to identify our golden zone area, we want to be bringing in our Fibonacci retracement tool, run it through the previous impulse leg, and we should definitely be aiming between the 50 and the 78.6% of that previous impulse leg for another opportunity to join the rally to the upside. So we should be having a potential buy zone around here. So for the sake of clarity, let's label it and place it right inside the box, and I'll be giving this box a yellow color so that we can see things clearly at this point. So we have the buy zone sitting somewhere right around between the bullish trend line and the 162.00 level, a level which was broken a couple of days ago. So we might likely see a situation where price will drop into the structure here, respecting it, evolving into a reversal pattern, probably a double bottom structure or a head and shoulder pattern that would incite another wave of bullish momentum to the upside. So what we are going to be looking forward to here is that if a breakdown of this structure happens, that is the 163.00 level happens, then we don't need to panic, as we have a bust up around here where we want to be looking out for buying opportunity. And how do we identify buy opportunity at this point? Well, what we want to be looking out for is a reversal pattern around that area, or buy pressure on our lower time frame, breakout retest on our lower time frame, then we could join that rally to the upside. And if a further breakout of the 163.500 level happens, we shall be getting ready to add more position to our existing trade. So that is my view here for any bullish momentum at this point. Now, if you are a counter trend trader, you are a scalper, and you want to take advantage of the breakdown retest of the 163.00 level, then you would need to scale down to a much lower time frame like your 15 minutes time frame and look out for retest rejection of that level to join the decline to the downside, which has a potential of giving you a maximum of 100 pips thereabout if price action moves that way. So that is one thing I'm looking forward to here on the GBPJPY. Then another thing we could take into consideration is the fact that the structure we have between the 163.500 and the 163.00 area could transition into a trend continuation pattern. And what do I mean by that? So following this impulsive move to the upside here, we saw a situation where price has been caught within this channel. So there is a likelihood that price will break out of the 163.500, and it's at this point that it has transitioned into a trend continuation pattern. So with a buy stop order sitting right above the 163.500 area, we should be looking out for another wave of buying pressure above this level to add more position to our existing trade on this one. So these are the scenarios we are looking forward to on the GBPJPY. It's a simple setup where we have identified a consolidation phase between the 163.500 and the 163.00 area. So like we said, we have an option of a breakdown retest of the structure to join a counter trend opportunity. But if you are not a scalper, you are not comfortable taking counter trend opportunity, it's not compulsory you take this trade. You can easily wait at the bus stop around here to look out for buying opportunity to join that rally to the upside. Then another thing I stated here is that if price action breaks down the 163.500 level, then this consolidation phase will have transitioned into a trend continuation pattern. And for those who are already in this trade, the buy position we took here on Tuesday, please move your stop loss. I think around the 162.600 area seems most appropriate to move your stop loss there. That is, if you are still in this trade, move your stop loss to around that area to secure this current position. All right, it's at this point I will be calling it a day, but let's do a recap of what we talked about today for the sake of those who are not part of the beginning of the session, so that you can be on the same page with us. So the first commodity we talked about today is the US oil, and on the US oil we have been profitable in the last 24 hours as we took advantage of the breakdown retest of the $76.35 level, which was the strong support level we identified at the beginning of the week. And with the breakdown retest of that structure, we were able to take advantage of that bearish momentum, which has given us over 100 pips in profit. Then we added another position at the breakdown retest of the $76 level during the early hours of today. And going into the New York session today, we have identified a simple setup here, and that is one, the bearish trend line. That is, after connecting the series of lower highs, as you can see, price has been bearish since the beginning of this week. We have that bearish trend line there, and in addition to the bearish trend line is the structure around the $75.50 level. And how did we say we are going to be using this structure? Well, we said if price action continue to trade below both the bearish trend line and the $75.50 level, we want to feel comfortable in our sell position. And for those who had missed out on these opportunities, I have said that a retest of this structure should be giving us an opportunity to add more position to our existing trade. Now, with what we have right now, it appears price is back into that zone at the $75.50 level. And to make things a little bit easy for us, let me identify a sell window for us here to make things easy for us to identify trading opportunities. So if we bring out our Fibonacci retracement tool, run it through the previous impulse leg here, we have somewhere between the 78 and the 50% retracement as an area to look out for selling opportunity. So I have identified that area. So we have a sell window between the $75.80 level and the $75.50 area. So what we are looking forward to here is a reversal pattern around this area. It could be a double top structure, a head and shoulder pattern. We have to scale down to our 50 minutes 5 minutes time frame to look out for this kind of structure. When we cite it, then a breakdown of the $75.50 level will be triggering a sell position for us. Now, there is a caveat to this current position which I made mention of, and that is if price action breaks out of the bearish trend line here, then that will be a sign that the trend line may no longer have the capacity to continue to hold bearish momentum. And one thing I stated here is that we don't want to jump into conclusions yet. If this happens, we want to remain patient, scale down to our 15 minutes time frame, look out for confirmations like buying pressure above the bearish trend line, then we could actually join that trend continuation to the upside. So with structures like breakout of $76 level, we want to be adding more position to that existing trade if that is going to be the case. But as long as price remain below the sell window we just identified here, we'll continue to remain bearish on the US oil. Then we went on to talk about the US tech. So on the US tech, we have been profitable since the beginning of this week, as we have been selling the US tech after price action broke down that channel we identified at the beginning of the week. And one thing we have seen here in the last 12 to 16 hours is that price action has fell within the channel between the $12,110 level and the $12,060 area. And we said this channel here has a tendency of transitioning to both a reversal pattern and a trend continuation pattern. Now we have identified how to position ourselves to take advantage of any trading opportunity that happens during the New York session today. So what we said is this: it can happen that following this impulsive move to the downside, we could have a double bottom structure here where the $12,110 level will be serving as the neckline of that reversal pattern. And if this is going to be the case, we want to see a breakout of the 12,110 to give us a confirmed reversal pattern. Then we could join a rally to the upside. And I told you that if we are joining a rally to the upside, this is more or less going to be a counter trend opportunity if price action breaks out of that level. And remember that we had a key level at the 12,200 level, which was a strong demand zone in the past, and this level was broken during the course of yesterday's trading session. And you all know that from a technical standpoint, whenever we have a breakdown of a structure, we expect that price action is likely going to come back, do a retest of that structure to incite another wave of bearish momentum. So if we are joining that counter trend opportunity here, then we might be having our TP target somewhere around here, waiting for a selling opportunity to join that decline to the downside. Now the other scenario we made mention here is if this trend continuation part, this consolidation phase transitions into a trend continuation pattern. And how do we know it is a trend continuation pattern? We want to see a breakdown retest of the structure to join that decline to the downside. So let's be on standby, have our orders placed below the support level and the resistance level of this channel so that we can catch that move when it finally happens. Then we went on to talk about the USDJPY, which has been bullish since the beginning of this week. Remember, we took advantage. Hold on a second, I'm trying to load up my chart here. So we have been enjoying a bullish momentum since the beginning of the week on the USDJPY after taking advantage of a buy position above the 134.150 level, with positions added at structures like this and like this area. And one thing was said is that price action has also been respecting this bullish trend line since the beginning of this week. So if price action continues to trade above that bullish trend line, we shall feel comfortable in our buy position. Now there's one thing I made mention of here, and we went ahead to go into the daily time frame to see how important the 135.00 level has been. And I told you that the 135.00 level is the highest point price has ever been this year on the USDJPY, And since price got into that level, we saw at 10 bar the sellers, in fact stronger 10 bar the sellers, to negate all attempt of the buyers to break out of that structure. And this has going on in the last 48 hours now, and this has resulted into the consolidation phase we have had here. So in anticipation of the FOMC coming up today, participants in this market are quite risk aversive here, waiting for a catalyst to give us a sense of direction. And with a flat channel around this area, it's important that we remain patient and wait out for either a breakout of this channel or breakdown of this channel for trading opportunity. And one thing I stated here is that for those who are already in this trade, we are going to be looking forward to buying opportunity above the 135.00 level to add to our existing position. But if you are not in this trade at all, then the breakout retest of the 135.00 level will be a good opportunity for us to join a rally to the upside. However, if it so happens that price action breaks down the bullish trend line here, then that will be a sign that the trend line may no longer have the capacity to continue to hold that bullish momentum. And if this leads to a further breakdown of the 134.700 level, remember this level has been a strong demand zone in the past. If breakdown of that level happen, price action retest the structure, we are going to be selling below that level. And as you can see, if that happens, that means this trend line also would have been respected one more time before that bearish momentum happened. And please note that I said here that we are not taking the outright breakdown of this structure, considering the fact that we have a bullish momentum this week. So we want to remain patient for further confirmation, which will likely come in the form of a retest of the structure. Then we could join that decline to the downside. And if that does not happen, if we do not have a retest, well, we should just allow that trade to pass. So that is that on the USDJPY. Then we went on to close the week out with the GBPJPY, which has been profitable for us since the beginning of the week, as we took advantage of a buy opportunity at the breakout of the 161.500, added position at the breakout of the 161.850 level here. And since price tested the 163.500 level, we have been witnessing sudden pressure around this area to emphasize the strength of the sellers at this particular point in time. And because of the situation we have here, we cannot ignore the possibilities that sellers could take over this market. And as a result of that, there is a likelihood that we could see a breakdown retest of the 163.00 level to incite a sell-off in this market. So I told you that if you are a scalper or a counter trend trader, you might want to take advantage of this opportunity, breakdown retest of the 163.00 level into this area where we want to be looking out for buying opportunity. But if you are not a scalper, you don't feel comfortable taking counter trend opportunity, I would advise you not to take this position, but instead wait for buying opportunity around the buy zone that we have here. And one of the reasons why we have a buy zone here is simply because of this impulse leg. And you know, from a technical standpoint, after an impulsive move like this, profit taking activities always result in a retracement phase, which might likely come within the structure or respect the bullish trend line or the 162.00 area in anticipation of another wave of bullish momentum. So this is what we are going to be looking out for to buy the USOil, the GBPJPY, if price action ever breaks down the 163.00 area. However, if this consolidation phase transitions into a trend continuation pattern in such a way that price action climbs, find higher highs, breaking out of the 163.500 level, then definitely we want to be adding more position at the breakout of that structure. So these are the things we shall be looking forward to on the GBPJPY. I hope I was able to make myself clear, and the fact that there are no questions simply means that we are on the same page on this one. So thank you for being around with me today. I really appreciate your attention, and I wish you best of luck during the New York session today. And I hope you are able to munch my screen so that you can use it as a reference point when you're about to make your individual decision for today. I wish you best of luck once again, and do have a wonderful and beautiful evening. Bye bye.